What's going on, everybody, and welcome back to the channel. So as I'm sure most of you saw recently, Fastly stock absolutely crashed hard after lowering future revenue guidance on weaker than expected revenue from their biggest customer. And in this video, I'm going to be talking about why so many investors sold on this news, even though normally stocks don't fall 30% on this kind of news specifically. And then I'll also be talking about who their biggest customer is and why this is such a big deal. Now, as odd as it may sound, the biggest reason Fastly fell 30% is because it's gone up a ridiculous amount this year already. Not only is it up 31% year to date, but it's also up more than 700% from the March lows, which is just insane. Now, typically when stocks go up this much in just 7 months, they start to price in all the good news there could possibly be. Now, the important thing to note here is that when stocks start to get priced for perfection, things that are good news, like beating expectations, may send the stock up slightly or they might trade flat. But when you get stocks that miss expectations, or maybe in this case, have to lower future revenue guidance, and they've also gone up 700% in just like 7 or 8 months, this could send the stock down massively, and this is what we saw with Fastly. Now, mind you, this is just one reason out of 2 that I'm going to be covering on why this stock crashed 30%. So be sure to stick around because I'm going to be talking about that second part in just a couple minutes. Now, when investors hear that revenue guidance was lowered, keep in mind by only a little bit, which we'll get into, they start to panic sell because they're already up 100%, 200%, 300%. They're pretty much up no matter where they bought in, as long as it wasn't in the past like week. So at this point, a lot of investors are not taking any chances and they're just taking their profits. And that is why the stock crashed so heavy. Plus, on top of that, I think we can all agree that at this point in time, most stocks are trading at extremely rich valuations, which means, like I said, investors are taking no chances. Now, don't get me wrong, if you're a long-term investor and you truly believe in this company, then you're getting them for a massive discount from where they were at just a few days ago. So if you started a position recently and you're down already, you should be happy to see this and you should be buying more. Now, I know personally, if Tesla stock, for example, crashed 30% on Monday, I would be loading the boat because that is a steal from where it's at currently. So that's the mindset you guys should also be having. And let me know down in the comment section if you guys got that reference, because I'm sure there's a lot of fans of that channel watching this video. So with that being said, let's get into the second part of this video. So if you didn't already know from all the headlines, TikTok is Fastly's largest customer, and in their most recent press release, they stated that due to impacts of the uncertain geopolitical environment, usage of Fastly's platform by its previously disclosed largest customer did not meet expectations. And this resulted in a significant reduction in revenue. And on Fastly's last earnings call, CEO Joshua Bixby stated that TikTok accounted for 12% of their revenue in the first 6 months, which also sent the stock down 20% at that time. And in case you guys also didn't know, we weren't sure at that time if TikTok was gonna even be a company that's allowed to do business in the United States. And that's why that stock fell 20% at that time. And it's also a reason why the stock is falling 30% this time. Now, the reason this is such a big deal is because when you get that much revenue from just one customer, you're put in a really risky position as a company, because if you lose that one customer, or in this case, they don't account for as much revenue as expected, then you're faced with either missing Wall Street's expectations, which obviously is never a good thing, or you have to lower your guidance, which in this case, they went with the latter. Now, the reason this is also bad as a company is because maybe that's revenue already accounted for, which in this case means that worst case scenario, you take a bigger loss on the bottom line because you've already spent your expenses thinking you were going to be getting that revenue. But if you knew that you weren't going to get that revenue, that means that you either have to invest less in advertising or less in research and development, which are 2 crucial things for any growing company. Now, it's not all bad news because, to be honest, they're really not lowering their revenue guidance by that much. It's not like they're lowering it 15 or 25%, because then that would be a big deal. But in this case, we'll see just how much they're lowering it. So according to their press release, revenue guidance is being lowered from $74 million to $70 million, which is only about 5% lower than what they originally said. Now, of course, no one wants to see guidance lowered, and normally 5% wouldn't result in a 30% drop of a company's valuation. But since this stock's up 700%, they're priced for perfection, and their number one customer just also happens to be on the bad side of the US government, this is what you get. But like I said, if you're a long-term investor, then this is a great buying opportunity for you. So I hope you guys enjoyed this quick video on the recent crash we saw in Fastly stock. If you did, be sure to hit that like button because it shows me that you guys like this kind of content. And also, let me know in the comment section if you guys are buying the dip or maybe have already bought since it's Friday. And if you're not, let me know why. So with that being said, guys, thank you for watching. Be sure to check out my last couple videos on a company called Nextech AR Solutions. They're growing revenues at over 300%. They have 4 verticals that are each in billion-dollar industries. And they're actually putting on an augmented reality concert tonight on Friday with one of the members from the rap group Migos. So it's definitely an interesting company. I think they have a bright future. And let me know what you guys think if you do check out that video. So thank you for watching, and I will catch you guys on the next one.